I want you to picture for a moment exactly what your life would look like if you were a millionaire. The truth is, you would have a lot of the same concerns, consistently working hard to grow as a person and develop fruitful, loving relationships all around you. Your greatest concern in life would still be your health and the health of those around you. There would be one main difference though, and it's an important one. You would no longer have to worry about money. You would have the freedom to do what you wanted, when you wanted. You would have control. Financial freedom is the freedom to be able to make choices. The choices about what you do with your most precious resource, your time, who you spend it with, and where and what you do with it. I want you to open yourself up as we begin to talk about what it takes to become rich. Traders are often very concerned with how much money they can make and how quickly they can make it. And each day and each trading session is approached as almost the improbable or impossible. The reason I want to share this formula with you is because it's very important to have the correct mindset, the mindset of an investor. And it's important to focus on this formula for the bigger picture. And this is going to help you to be able to execute, which is what you need to do in order to achieve your goals. You need to be able to execute. So let's take a look. Starting with a $3,000 balance, how do you get there? How do you achieve your goals? Where are you starting from? If you're starting with just a $3,000 balance today, and you are committing to making for the next 5 years, regularly, yearly, another $3,000 deposit, what is that? Like $260 or so a month. Go ahead and take a look, and the rate of return. You know, holding Bitcoin, what do you think you could do? What do you think you could achieve yearly? Now we know historically the average return of Bitcoin, yearly return of Bitcoin is something around 200%, right? But that's including when price started going from a penny and then to $1. You know, what happens if you take out and use from 2012 to today? I think the average rate of return annually is something closer to about 120%. I would like to see that. I would like to know actually. Take a look at some of these numbers. This just happens to be the first choice on DuckDuckGo for Bitcoin average yearly return. And it's 2017, 1300, 2020, 300, 2019, 87, and 2018, 72. These two cancel each other out. You're looking over 4 years, 1600 divided by 4. You're looking at 400% a year. There you go. Mean annual return, 400%. Absolutely astonishingly. I mean, and then I went over here and looked at this Reddit thread, and they're showing the percent change for every year into Bitcoin. It's a couple of down years. 2022, right? Good chance it's a down year as well. You know, that's what I'm expecting. Not being invested, you know, whether that's worth it to you during these bear market years, it could have a significant change in your overall accumulation. That's for some more advanced stuff. So you can see, even if we did experience something like drastically diminishing returns, you know, instead of 400% over the last 4 years, maybe we're looking something forward at like 200%. But even if we only get 70%, what happens if you use something realistic? What happens if you use something like a 30% return over the next 5 years in Bitcoin? You're looking at taking a total deposit over 5 years, $18,000. Growing your account to $46,000. That's only over a 5-year period. But it's also with a 30% return. I think, I personally expect over a 70% return annually in Bitcoin over the next, 10 years? Absolutely. So let's take a look at that. Let's make that 10 years, 70%. I think underestimating greatly over there. We'll see. We don't know. I think it's safe. I think it's safe to work out my plan using 70% expected return annually in Bitcoin over the next 10 years. And then you're taking that $33,000, you're turning it into $2 million. That $2 million is comfortable. You could basically buy whatever you want, whenever you need it. You know, really very comfortable. But the thing is, when I first started doing this, I did this with 11 years. It was an 11-year plan with 3 halving events. And if you really want to plan this out correctly, starting today with $3,000, you could go ahead over the next 11 years, expect to have 3 more halving events. Next one, you know, it's every 210,000 blocks. Next one, you know, estimated 2024, 2028, 2032. But the thing is the bull market happens the year after the halving. So you're going to want to make this a 12-year plan, 70% annual return. And now you're looking, you know, total deposits over those 12 years,
$39,000, $3,000 a year you're committing to this plan, to your investment plan, and then you're looking at $5 million if we hit our expected 70%. We don't. I mean, anything can happen. Understand your risk and what your risk is before you make any investment, and do not invest any more than you could afford to lose. But make sure you make calculated risks. Is this a calculated risk? Now, if there was just the 85% annual return in Bitcoin over the next 12 years, you would be looking at something, $15 million. That's, from here on up, you go on, borderline ridiculous for a 12-year plan. 70%, 12 years, next 3 halvings. You're starting today. $5 million is rich. $2 million, you're definitely comfortable, no question about that. But $5 million, I would say that it's a great plan to have in place. I think it's foundational, fundamental, that anyone beginning before anything else should have this plan in place. And then you could go ahead and leverage different investments.
And that's why it's important to focus on this formula. It'll help give you the proper perspective of what it is you're looking to achieve for a longer term. And it's going to help give you the discipline you need to stick to the plan, because execution is everything.
Let's start this off.
I went and wrote all my parents, my family, everybody. I tried to get everybody to see, right? I'm just saying, don't have a time preference. Just put some money in there. Put 10,000, put 1,000, put 500, put whatever you can afford, and just ignore it. And come back in 10 years and you'll thank me. Yeah. Because that return is obscene right now.
And that's what I'm trying now with the new opening, the new intro, trying to get everyone. Because there are people who are with us each and every day. There are people who maybe only see one video, but just make exactly what you were just saying and just make it within 5 minutes so that everyone should just pause for a second and understand, hey, listen, look at this over the next 12 years, the next 3 halvings, what they could do. Now for us, maybe it's less than that, 2 halvings. For me, it's not about who's right. For me, it's about sincerity and trying to get this right for myself. I'm just trying to get people to see in the lens that I've been looking at this, that I continue to look at this, and at the same time, seeing of us together could give ourselves the clearest guide possible. That's all I'm looking for. But for me, like if you're looking, for a prolonged bull market into 2022, and this thing peaks out in 2021. And not at diminishing returns, but increasing returns. I mean, you were really off. I don't want to be really off. I want to be and that's so I'm not.
And I think he would agree with everything. At least when I've listened to him, he's purely what I would maybe I call him a scientist, right? I mean, he has a hypothesis and he's just going to adjust his model. He's just providing ranges and ideas and right now his model's saying that the thesis we have, which is basically kind of this high performance at the very end, right? According to his model, that's not going to happen. It's more this 160K range, right? So I think you and I are on the same page. We kind of said, well, what's the minimum possible? It was like about 160, right? So I positioned a little bit below that, right, to meet my goals.
100%.
So it's interesting. Like the more people you listen to, frankly, the more I think our thesis has a lot of legs under it, simply because I see a lot of other people's alternate theses actually supporting our thesis in different ways.
Right.
And so that's what I do all the time. I spend every day trying to break my thoughts, right? Trying to break the thesis because, if somebody has a better idea, I want to know about it, right? And so far,
me too.
The only one that has a different idea is it's just a different range and a different length. That's all. So I kind of figure if we're right, it'll be shorter and it'll be higher. If we're wrong, it'll be longer and it'll be a little bit less. But either way, I'm going to meet my goal.
Two questions. First one on Ken. If we see the type of range that we expect, right, is his model of lengthening cycles still correct? Or does he need to see something like 160 around, 2021? If price is trading at 350, is his model still correct?
His model would still be correct. His model actually says that would occur in May. He says we're going to have 3 waves.
That happened in 2021. Is his model?
What's that?
No, if that happened earlier, if that happened by the end of 2021, if we saw $350,000, is his model still in play?
No.
Yeah, that would be a little bit tougher, I think. I don't know if that upper range is in there, because I want to say his second bump in the October timeframe is similar to our 140 number.
Right.
That's kind of his wave 2. And then his wave 3 is way up there. It's like up to $500,000 in May.
Right.
So he's kind of leaning towards, he's got a, what do you call it, a psychological model, right? He's kind of saying, well, hey, we're in the bull market, and each cycle is 43% longer than the last cycle, right? So all he's doing is saying 2016 days at 43%, and that's how he gets to May of 2022.
Now
Whether that's right or wrong, I don't know. You look at the price performance, we could be right, but what he's hypothesizing is that there'll be a surprise upward trend. He agrees with our kind of like, this trend is going to end at the end of the year, but there'll be another one after that. And that's a little bit of a stretch for me, but it puts something in the back of my mind, because, hey, that's also kind of what Ben is saying, but just in a different way, right? He's saying we're going to have a lengthening cycle. So it's a little harder for me to say, hey, just take one data point and add 43%. Let's just put it that way, right? That's a little bit hard to say. And I'll say one other thing just real quick about that is, I'm not sure Ken takes into account the analysis about how the miners switched from GPU mining to ASIC mining, right, in the 2012 cycle,
right,
which caused it to be shorter to begin with, right? And so there's some linking there too. That's kind of, I don't know if he's looking at that or not, to be honest with you. So he hasn't mentioned that. I haven't heard him talk about that, but.
No.
But I think that's, he's just kind of factoring that in, and maybe he could be right, but I kind of suspect if you standardize that all out, he might be wrong, and it wouldn't be 43% anymore.
And again, if we do not peak at the end of the year, then you guys are already paying attention. So I'm so glad. I don't think that happens. If it does, I want to know a lot more, for sure. Yeah. Right. But the importance of understanding.
So the projections are that the cycles are the same length. The 4-year cycle, when you look at how long the previous cycle was, it's like 1,402 days or something like that. This cycle is projected to be 1,420 days. So I take the point that you should view it on block count, but over that period, I don't see that it's a big enough impact. Yeah.
Mm-hmm.
No, thank you. Yeah. So, and we've already had the first adjustment after the China mining FUD. Well, not FUD. It actually really happened.
Right.
And that will take them. From my understanding, is that a lot of them have moved, but that will continue to happen. It's kind of a relocation process for them, which gives the difficulty rate enough time to smooth that out. Yeah. So I don't see the cycle length changing significantly. I think when people say diminishing return, lengthening or lengthening cycles, they're only talking about when the peak of the bull market is within the 4-year cycle. And I think that, yeah.
Oh, wait.
So based on that,
Ian, hold your. Oh no, I'll write it down. Go ahead, keep going. I'm sorry.
Yeah. So I think that's the thing to be clear about, is you're talking about the lengthening of the bull run to the peak within the 1,400 and something day 4-year cycle. Yeah.
Not with Ken's model, right?
So no. So Ken is not saying that the 4-year cycle is going to take any longer. The 4-year cycle is based on the halving events. They happen after 210,000 blocks. Yeah.
Yeah.
And we can see, looking at the Bitcoin clock countdown, they're going to be pretty much on the same. The only one that looks off is the 2012, and we think that's down to the change in mining machines that we used. Yeah.
If the bull market keeps extending by 43%, that is that the remainder needs to be taken by either the bear market or the accumulation phase.
Yeah.
I heard Ken say when I did the interview with him that the bear market's getting smaller, but the two past bear markets have both been exactly 12 months and 2 weeks. You know, the bear market is the cycle peak to the capitulation low. So either the accumulation phase has to keep decreasing by the length that the bull market phase is increasing, or after two more halvings, the next halving is going to be extended past 4 years. I have trouble.
This lengthening and softening happen, and it could happen over the next, I don't know, it could happen over the next 3-4 cycles. Yeah.
Yeah.
This cycle right now that we're looking at with Ken's model, he's just saying that, and I think what he really focuses on is the lining up of previous cycles and when they peaked. So he sees that first peak happen, and I agree with Ted that I don't think he factors in the ASIC mining issue that happened in 2012. Be interesting to get his take with that extra information. Does he adjust his idea? Mm-hmm. But what he sees is that the mid-cycle shakeout happens at the same time as the dip of the first cycle, in 2012. And then what he's going to then he projects forward, and he says, if I project forward again, I see that the 2016 cycle, it peaks in line with effectively October, which is when we were originally projecting when this cycle would top out. Right. So he's saying, well, maybe you get another dip then, and everyone would be thinking, oh, that's the top.
Right.
Yeah. But you've actually got one more wave to go. And I would say to you that, is the thing that you've always said to us, and I always come back to this, is if we don't see a blow off top in the price action, that is signal. Can you get a blow off? Can you get the top of the bull market cycle without a blow off top? And that's the thing that I think we really have to focus on is that price. So when we come into the all-time high, when we come into October, what does price look like? Is it going up? Other people look at that price and say, oh, the price is going up like, it's going mad. But we know it's not moving fast enough, not compared to previous cycles. Yeah. And if it's not doing that 35-day move up, you may see the dip, but it's only, and then I would be looking at Ken's model and be thinking, there's some real validity there that we've got to October, we got to a higher price. It isn't as high as we was expecting.
Right.
The price action didn't go parabolic. We need to be careful of that and then see what happens after.
In hearing you speak, another strength of Ken's model or thesis is that if that were to happen where we saw some type of peak around October or even into December, and then price back off and then start making those higher highs, a lot of people are going to be saying, well, this is the super cycle, right? And
Absolutely.
Us to have the awareness that, no, this actually might be playing out as Ken was illustrating to us, is a great edge to protect you from being like, no, this is the super cycle. We're not, from now on, we're not coming back down. But to have that could be really checks and balances, understanding what Ken is predicting if that were to occur.
Yeah, and I think we've really got to monitor these key points in the cycle that we're going to come across. The all-time high, the price action into 100K. How price action goes as we get towards October, when a lot of people are going to be thinking, all right, that's the top. Yeah. So, and again, the other point I'd say to Ken, based on his original idea of his model, is now you've got this accumulation phase of a couple of months, which how does that affect his model in any way?
I don't want to focus on any of their models until their models would be kind of, I'm aware of them, but unless they seem as if they're playing out, I think the one that plays out is what we're looking at.
Let me just put it this way: is that's what I'll be looking in their commentary on their models to see how they have how. And now I guess that's where my question to Walter is seeing how they adjust their models to how price action occurs during this cycle and how events change. Yeah. If it's rigid, this is the model I created 12 months ago or 18 months ago, and this is how it's going to, then, then I'd say, well, you're not taking into consideration what you're seeing happening.
Our model is fluid in the fact that we're trying to figure it out. And what I mean by
that's what I mean.
The only model that I know of that's correct is the 4-year cycle. And there's both the bear phase and an accumulation phase every 210,000 blocks. But as time's progressing and we're lining things up from the halving and the new all-time highs and then the mid-cycle dip, we're trying to form what we believe is the best guide for moving forward, understanding that at any time it could break.
We're trying to create the waves inside the model, aren't we? We're trying to get a feel for more accuracy on when the top might occur based on how price action is occurring. Right. If someone creates a model at the beginning before even the halving event occurs and doesn't change their model, then they're not taking into consideration all the data that's happening during this cycle. Right. And the problem with this cycle is that it's not only the thing that you knew was going to happen was the halving, but what you didn't know was COVID, the stimulus that was occurring. Yeah. Right. All the events that are occurring through the cycle. So I'd be like I say, I'd be looking to see how they are developing their model and and what clues that can give to how we develop ours and and that whole sort of no one's right, no one's wrong. We're all just trying to learn from each other.
Ted, I wanna explain this to as if someone was looking after this for the first time. All right. Okay. So I want in your words. All right. So I'm going to start with obviously this light blue line over here is the 2012 cycle. Yeah. Yep. And then below it, the blue is the 2017 cycle. Now, are these two lined up from their halving event?
No, they are not. And I think that is something that I think Ian would slap me across the face for doing so. And the only reason the only reason I did this was that it just seemed to align better. So I was purely going on price action. So the 2016 cycle, the blue line is aligned to the halving. That has not been adjusted. The 2012 cycle, which is scaled to the halving price, this cycle's price, has been adjusted. It's been adjusted to that dip right there that you've drawn in. Okay. And that's the only real adjustment. All the other models that are overlaid, which are all the other colors of green that you kind of see these swipes going on across, are all aligned to the mid-cycle low, right? Well, I should say that they're scaled to the mid-cycle low, but the different greens are scales to different parts of the cycle. So I've scaled it to the halving, to the mid-cycle low, to the market low, and I think there might be one other. You can pull down that 8 up on the corner up there on the left-hand corner. You can kind of see what it says. The mid-cycle low there, basically that first mid-cycle low says what things are aligned to, and you can kind of see right now I'm scaling to the halving, to the prior all-time high break.
When you say scale to the mid-cycle low, where is that on the chart? Over here?
Yeah, they're overlaid on each other. So if you can actually, if you turn them off, you can actually see which ones are doing what. Okay. So, and if you turn off like the first 3, that should be, well, actually it may not be similar. I wanted to say this might be similar to what Ian is doing, but the thing is, if you go look in the settings, for the mid-cycle low.
This one over here or up higher?
One down, go one down and click that. If you go back to inputs and turn off the adjust price forecast, That's basically what Ian has on his chart. On the one that the very simple chart that we start with, that's Ian's model right there. So it's just in and out. You can kind of see it. If we turned on the 2012 and 2013 cycles, I got them turned off in this model.
Okay.
The blue lines, if you look under the style, you'll see they're turned off right now. It's basically the Ian's idea. And what I'm doing is basically adding some price action volatility. I look at the last 50 days and I put the price action into that. It's kind of like a Bollinger Band cheapy way of doing it. But that effectively gives us some range to go look at. And then the other cycles basically are all aligned to the mid-cycle low, but they're just scaled from different parts. And that gives you the range at the end. Because my range is anywhere from like 160 all the way up to like 500,000, right? So I wanted to be able to somehow project that same sort of range. Yeah. And it just depends on saying who's right. Is it right to scale from the halving? Is it right to scale from the prior all-time high break? Is it
both them all
right to just scale from the low that we're at today?
I mean, and obviously,
so that kind of,
even if we hit some crazy like Raoul Pal possibility, and he's right, like, and he was very right about the 50% correction, and you know,
yes,
it is, why not probable? It is possible that, you know, if that were to happen, your model is allocating for that. If we would hit something like
that's correct.
I love this because I really think this is the range here anyway, right? It's what I have between 250 and 420,000, right? And I think, you know, I think what's going to be happening over here, by the way, is that whether it's some large public company, some large country, there's going to be multiple, you know, whether it's companies and or institutions or public companies or countries FOMOing in over here, and then it's going to be sending price, and then there's going to be no one eventually that's like the next person coming in. Kind of similar to what happened with MicroStrategy and Tesla. Like there was no follow up behind that, and price went right. And I think that this bull market peak is going to look like a lot of big money coming into the market, and then all of a sudden, like the demand is going to dry up briefly, and you're going to see price. And, you know, we'll see. I mean, that's all speculation. I have no idea, but.
But that's the part of the analysis, that psychological analysis, that I think is missing from people like adjust for that by simply saying, hey, my model is a logarithmic, and he has a band at the low part of the model that he buys, and he has a band at the top of the model that he sells. And he doesn't, I don't think, you may have to, I don't want to put words in his mouth, but frankly, I think his attitude is, if it's in one of those areas, you should consider buying or you should consider selling. It's kind of like an indicator for him, right? It's similar to your indicator, like where you have the
go basic like this, right?
Yeah, it's kind of like it's kind of this. It's the Bitcoin investor tool type thing. His looks different than this, but
for a lot of people, it's a grandma strategy, right? And it can be good for a lot of. But what we're talking about is like, this is like, I believe is high end advantage.
And so just as we get close to the end, because I think Ian, your idea would be as we get to the next dip in probably 60 days or so, because it seems like we're on a 60-day sort of up and down a wave, we would then rescale all of this to that next low so that we can get a better fine-tune alignment at the top, right?
Oh, is that Ian? It's the first time I've heard that.
I think that's kind of been the thesis all along, right? Is that you want to readjust this market low as you're getting closer. So as the next dip gets closer, you rescale to that low. Is that true?
We spoke about that.
Okay. Yeah, I think it was I think at the time it was whether there was going to be two waves before the 35-day blow off top phase, and it was, I think at the time we were looking to realign on that dip before that 35-day.
The dip before parabolic, right.
So,
so like if you go back, Jordan, to the original chart,
I kind of tried to like, I think we were starting to get a little bit too hyper accurate.
Yeah, I agree.
I tried to like,
and I think this is such the key event, and it's, this mid-cycle bottom, is that I'd be, for now, I'm quite happy to just see how price action works from here.
Yeah, let's go. I agree.
Mindful of what price action we're expecting to see if a blow off top was about to occur. So yeah. And it's almost like we're not seeing it, so we are where we are. We're not seeing it, we are where we are, and we just keep on going back and checking. So other people are looking at the model going, oh look, we're at 80,000 or some price, and they think that we're going exponential, and everyone's thinking that we're just about to go, and we're like, no, this is just what we're expecting. Yeah, we're not at that stage yet, but we keep on checking as this second half sort of plays out.
And Ted, I'm glad you brought that up anyway, because it also then brings our attention to if everything is playing out and we get the last 35 days, it happened almost symmetric between the last two blow off tops. I mean, at that point, it's worth us being like focused in on it, but at the same time, I think we need to do a better job about. I think we're becoming very hyper focused on the day-to-day movements, and by like changing the vantage point, I think it's more beneficial for everyone, because there's not people as focused in on. But if everything continues playing out and we get into those last 35 days, we're going to be we're definitely going to want to be aware.
Yep.
Mic check. What's going on, everyone? So what an honor, what a joy, what a pleasure to be able to work with people like Ian and Ted. I am so grateful that God in his providence has put me in touch with people like them, with people like you, Alan Au, right? Alan AU, Giles, so many, Heath, Brandon, Alan P. The list goes on and on and on, and so many more. Peter and everyone. Thank you so much. Dave, Craig, you were asking, by the way, yesterday whether or not we're going to be doing the training sessions this week, or this will be the last week with the family going on the 8th week in a row. My goodness. You know what? Today, right after this, I'm going to be recording with Benjamin, and I'm really looking forward to that. So today there will be no training session, but we're gonna do one tomorrow. Oh, I don't know, but Greg, you know what? We're just gonna next Tuesday and Thursday and then on every Tuesday and Thursday do our CTM live training sessions, going over the markets together. But this week we got the baptism of Christopher on Friday. We have family with us. We have more family arriving on Thursday. Craig, I think that's the best way to go. Listen, everyone, this over here, CTM modeling crew led by Ted and Ian, right? We also have lots of people like Jesse contributing. Not just Jesse, Ted and Ian in Discord are everywhere, working with everyone. Everything that's shared with inside CTM is considered as valuable information and considered, whether or not it's in a prototype at some point or other, and how that collectively works with this model together, And Ted has gone ahead and he's uploaded this version over here with this description right now. It's in Discord in the resources if you want to go ahead and download it to your own chart as well. And yeah, it's a work in progress. And what we're trying to do over here is not just understand the larger cycle of Bitcoin, be able to ride those waves, right? With the best and greatest precision as possible. So this was a great intro today with everyone working together, explaining what we're doing, how we're doing it. We know that, by the way, right? This is all the work in progress. What do I mean by that? We started this off with the halving tracker, lining this up closely off of the halving event, right? And then in consulting charts, BTC, elsewhere around the whole interweb, we figured out, you know what? Ian was dead on this as well. We want to start looking at price, lining them up after the new all-time high, right? And then we didn't really know what comes next. We were talking about, hey, listen, there's a mid-cycle shakeout that occurs in the previous two cycles. We have to watch out for that. We don't know what it looks like this cycle. We're not expecting it to be the same exact, but we have to watch for it. And it was a lot bigger than we expected, or than I expected. I was looking for something like maximum 40%. It was a 53% correction so far. people like Raul told us the whole time, expect a 50% correction during this bull market phase. But nevertheless, there was a mid-cycle shakeout, and we, over these last couple of months, have been looking to line these cycles up off of the low of the mid-cycle, right? Is the low in? We hope so. We don't know for sure. Price coming off of what appears to be the low is coming out on the same angle and trajectory that the previous two cycles did come out of. I mean, that's I want to say positive. That's a good sign that, we're on to something over here for sure, right? By the way, we know that this cycle so far, an average of the two previous cycles, what do I mean by that? It has less volatility than the 2012 cycle. It has more volatility than the 2016 cycle, both on price going to the upside and to the downside, and also in its consolidation phase, right? So we're not yet seeing anything like diminishing returns, right? We are seeing returns on par with the 2016 cycle. Why? What is possibly causing that? Is it has to do with the uber easy monetary policy that we're seeing from the Fed? Did it have to do with the liquidity crisis, the dollar crisis, the global lockdowns that basically ensued a tidal wave of liquidity from central banks around the world? Is that why perhaps instead of seeing, $160,000 diminishing returns, what we set up out in 2019 as our base case, and then we had to pivot? Why? Because the market's always pricing in new data and new things when the central banks are just month over month continuing with massive QE purchases, right? 120 billion inside the United States alone. ECB is now outpacing. Is that, if not in lockstep, and that's just two central banks. Take the G4, take the G10. It makes sense to see Bitcoin this early in its adoption cycle, and there's not even 1 billion users on Bitcoin yet. It's very early in the cycle. That adoption curve is still going up at a sharp angle in the early adopter stage. Yeah, as it flattens out at the top, what is that? Is that 3 billion users? Is that 5 billion users? Is it 7 billion users? I don't know. I do know that Starlink is making sure that the world is able to access the World Wide Web and that everyone already has a smartphone in their pocket. It seems conceivable to me. Will we see at that particular time, as the adoption curve continues to climb, that we start seeing then lengthening cycles or a more softening, as Ian said, cycle, where we're seeing actually diminishing returns? Well, that's what we're looking for, but we're not. That could be 2, that could be 3, that could be 4 or 5 cycles in the future. We're here in 2021. We have to focus what's happening here in 2021, because there's a big difference between able to ride these not only cycles, not only phases within the cycle, the bull, the bear, and the accumulation phase, but to have that precision, big wave ability. And that's what we're doing over here, working together to make sure that we're able to do that. 2 bumblebees, right? Peace, Jordan. I have watched your daily videos faithfully and silently for more than a year and have earned life-changing money, literally millions with your guidance and teaching. A topic for another day. He's not alone. Derek's not alone. So many, right? Myself included. This is what we do here and why. On TradingView, there is a Bitcoin US dollar index ticker that has all the historical data and updates real time. Unlike the BLX, the brave new coin. Might this ticker be helpful to use? CTM works together on all levels at all times. It's absolutely astonishing. Might this be helpful to use on the cycle model you posted yesterday? Blessings and so much love to you and your beautiful family. Derek, thank you, Derek. Ted is saying, listen, consistency is more important than anything. This is when data modeling. When I model businesses' processes at L3 Harris, I made sure we constantly use data. That meant agreeing on a data plan. For Bitcoin, this means I use BLX close always and ignore intraday high and low, right? For what it's worth, a data plan usually exhibits problems when outliers from the intraday higher day or low are used only to bolster one side of a thesis. And then also Ian is yep, I agree. I've always modeled on a day close to keep things consistent between our charts and how Charts BTC, by the way, big shout out. If you're not following on Twitter, Charts BTC, he's the one who really helped me illustrate to all of you back in 2019, the 4-year cycle, to help us make sure that we position smartly, right? Understanding the risk. Nothing is a given. Nothing is a guarantee. Halving tracker also helping us see the way after the halving event into that early bull market phase. When I pull the raw data from Coinmetrics and Google Finance for the bull of all bulls chart, I know data can vary between which exchanges they're using for reference, but sticking with the daily close would be best rather than using intraday high or low, which would add a further variable. And that's CTM. That's CTM all day long. And I'm grateful for all of it. We're seeing a pretty nice defense take place here by the buyers. What do I mean by that? Over here at the top, we received news that, Amazon's denying all reports about, intimately accepting Bitcoin on their site and yada, 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 or creating their own coin. And then, but they said, well, we're still looking into it. And then you saw the market sell off on that. That was the bears' opportunity. They weren't even able to bring it back into the trend line. And by the way, I don't know. I don't know if this angle holds or not. It would not be inconceivable if that we find out we're looking at an angle like this over the next few days. I think we'll have a lot more clarity. But for right now, this is the angle that we're looking at, and the buyers were able to step in. Is there any horizontal resistance over there? There's this whole area of supply. Buyers defending very nicely. This trend line over here, we need to put onto the bearish case of Bitcoin. Let's do that together. And first, from afar, here's the bullish case for Bitcoin, right? By the way, we drew this in down over here and when we saw the descending wedge take place. This was our first repair. This was the first time since this what do you call this? My daughter called this like, the bears had like something. And they did. This is a 53% drawdown over there, right? A lot of people during this 2-month consolidation really trying to play this to the downside and upside. We stayed aside. We said this is unclear. Before the fall, we said this is unclear. We need to get aside, right? And by the way, you all remembered the work we did. And if you weren't a part of it, go back and watch what was going on in April over here before the mid-cycle shakeout, right? And the melt your face up move that didn't happen. Watch what was happening over there, and then watch over here at the bottom of what I perceive to be the shakeout, because we have the guide of the previous cycles to go off of. We knew something needed to happen. We didn't know what it was going to look like. When we have this 25% drawdown, I think that's the mid-cycle shakeout. And as we start resuming out and have that repair right there, I say this is the beginning of the parabolic move into the blow-off top. Right? But then all of a sudden, it wasn't a V anymore. You see price came back down. This is May the 13th. And I say, yep, you know what? I'm wrong. That's not a V. Could you imagine how well and how accurate we've navigated this monster, the bull of all bulls? And then over here for this, 3-week period, on the wrong side of the trade, but how quickly getting neutral back on the right side of the trade. And then this developed. And we stayed unclear on the sidelines. And everything still remains unclear until we break the most important trend line in crypto, right? It's happened in the 2012 cycle. It happened in the 2016 cycle. And by the way, in July 2017 was the breakout from the mid-cycle shakeout, and then the break of what was then the most important trend line in crypto, sending Bitcoin up 10x, from roughly $2,000 to $20,000 over roughly the next 150 days. Is that what we are potentially looking at, something like that happening? Or will this cycle, which is not showing yet diminishing returns, will it actually have over a 10x return from over here? Will it have something between perhaps the 2012 cycle? A lot of people, right, Raul's one of them. Let me pull up what Raul is talking about. By the way, if you're not following, Ian on Twitter, let me go ahead and throw that in. Make sure you get a follow right over here. If you're not following Ted on Twitter, make sure you go ahead and get a follow over here on Twitter, and make sure you follow the amazing work that these two continue to put out and help us Raul is talking about, listen, let me just update you with the chart. And I really feel this current cycle in Bitcoin is closely resembling the 2012 cycle in Bitcoin, right? And that's something that we've also really have been on top of, right? It really matches what we believe. However, at this particular point in time, we're getting ready to see, and our belief is, well, I don't think that we match, the 2013 blow off top in big. That's pretty like substantially steep, right? What was it? I forget. Was it a 38x this cycle? Now, I think we're going to more closely resemble, Ian also picking up on this all the time, that we're going to more closely resemble what appears to be the trajectory of the 2017 bull market run during the 2016 cycle. And if you saw from earlier in the video where Ted showed you where Ian's model specifically is highlighted, and you can see this whole area, it kind of looks like this, where the area is the darkest between all cycles, right? And is that something that we're going to see that's the base case over here, that we start resembling now the 2016 cycle. Right or wrong, we don't know. But anyway, that's where we are. What else? I want to take a look. This is the bullish case for Bitcoin, the bearish case for Bitcoin. And I want to add in that little trend line that we're closely tracking, right? Just so we were ready to see when the bears have their next opportunity. Will it be coming off of the trend line resistance of the most important trend line in crypto? Quite possibly. By the way, if you're new here, welcome. And if you're not, welcome back. This is Jordan with Conquer Trading and Investing. I am so glad that you are here. It is good that you're here. If you smash the like button, it will help someone else who belongs here, who could possibly change their life, could possibly contribute to the goodness that we all share together in many different ways. Make sure you smash that like button. Make sure you subscribe to the channel and keep updated with everything that we're doing over here. And I'm just going to draw that in for now. Something like, I still need to go to my candles. I need that precision. So that's what I'm going to do. And I'm going to go ahead. I'm going to draw that in like that. Jump back over to my line chart. And then we got something over here that we could use as a guide. Now, I don't know yet whether or not this is the angle. We're only looking at 48 hours over here, but I'm watching and I'm setting it up and I'm getting ready to know when the bears have their opportunity. And this is their place, this circle over here, that trend line. That's when if you're bearish on Bitcoin, if you're looking to sell Bitcoin, right? I know I warned a lot of people in this area about doing it. Usually you don't get breakdowns from a downward sloping angle like that. And I warned everyone, listen, but people make their own decisions, and don't do something just because I'm doing it, or don't do something because I see it or I believe it. My conviction, my confidence, it comes from a long career. It comes from, if they had a master's in trading psychology, in macro psychology, I believe that I would have it. I never went to school for any type of finance, for trading, completely self-taught, been trading over 20 years with massive experience and a history of making money and being on the right side of the market. If the bears, the sellers, are going to make a stand, this is their opportunity. Now, before this move up, I was letting people know that was the base case to take place, that we hadn't even had, since this drawdown over here, any type of spike up. Now it's happening. To get clearer on what happens next, you need to look for a break of the most important. I'm showing the bearish case for Bitcoin over here. Nevertheless, in order for the bulls to say that they have clarity, right? It wasn't the breakout of the descending wedge. That was just like the first attack. This is the battle. Get above here. Bulls got momentum. Things are a lot clearer. And at that point, I'm a lot confident that the low is in, and that the golden ratio, the golden pi ratio, big shout out to Year of the Bull, right? Misconfig.exe, that the golden ratio, the pi level 1.61, has held in Bitcoin for the third cycle in a row. I love the root, right? I love the Year of the Bull, the people that CTM surrounds themselves with and attracts. It's a beautiful thing, What else are we looking at? Ian's pointing out the final capitulation dip, right? It wasn't really a dip, right? Everyone knows that we were potentially noticing, after noticing that we had not a blow off top first wave, which was what I was looking for. It's that video I did in January, and I said, look, if we have a double wave this cycle, I'm looking for that blow off tight. Instead, it was a 3-month rounding top. Caught me off guard, right? But that helped me. That gave me the ability going forward to self-adjust and being aware that, you know what? Why the rest of the field was looking for that capitulation event and saying there's no way we go higher until we have a capitulation event. I was like, well, you know what? We had a rounding top. It would make sense now if we had more of a rounding bottom, and it appears that very much could be in play. But we're just working together to continue to try to keep ourselves sharp. Iron sharpens iron, right? Is what we're doing. It's who we are. And other people have other theories out there, and you could see that we had Ken on to discuss his lengthening bull market cycle theory, and it's something that, you know what, it was pointed out in that video. If we do see some type of top in December or thereabouts in the end of 2021, and then all of a sudden in early 2022, price starts making a higher high. And then all of a sudden the FOMO is like, we're in a super cycle. This is a super cycle. And, having Ken's model at that point is a huge, 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 huge gift, because that would prevent you from getting sucked into that FOMO and being aware it might be transpiring. And that could be Ken's third wave. So I'm grateful for everyone we have the opportunity to work with. Just to refresh in your minds, this is the current cycle over here. This is the halving event, and you're looking at the mid-cycle dip over here, and that was a 250% return. If you look at the previous 4 years earlier, same thing, July, after the halving, you have the mid-cycle dip. That's what was the most important trend line in crypto. It was also a 250% return. This went on for almost a 10x from here. So just a couple of weeks ago, people were wondering if Bitcoin's going to get over $100,000 this cycle. We've held firm. We continue to hold firm and continue to make sure that we keep ourselves sharp. All right, everyone, I'm going to get off over here now. And, I have a conversation coming up with Benjamin over at the Cryptoverse. Looking forward to it. And just want to help more people understand what we're doing and how we're doing it to keep more people on the right side of the most important trade that matters. There's a difference between being like, in 5 years during the 2025 bull market, I expect Bitcoin's going to break $1 million. And there's a big difference between like, well, over 10 years, we're going to get to $1 million, right? Both could walk away and be like, look, I was right. We're trying to do here is do some legendary things. We're trying to have what is the most accurate model as possible and just not going ahead. And you've seen how I've showed you, listen, if you want to follow something from afar and you want to look at how to, buy something when follow on the 3-day, pull up the true trend BTC, and then in your accumulation zones, which just happens to match the 2-year moving average, and then the 2-year times 5 moving average as sell zones and buy zones. And this gives a much better opportunity to sell than just using the true trend alone when it's oversold, both giving almost the same exact buy. You could use a model like this and you could be right. You could be correct and you could do life-changing things, and it's all good. But we just want to continue to improve. Everyone, have a beautiful day, and I'll see you all tomorrow morning. yeah, let's get some heads. It's Friday. I mean, it's Friday. What am I talking about? It's Tuesday. It's Taco Tuesday. What would this session be without ending it with some head snack? I'm going to drop a beat right now. Make sure you're prepared for it.
Markets, analyzing the charts, hitting projected targets within the margin. Find the flow, sip a matcha, and wait for the waves to come in with lobsters. The kind-hearted Jordan Fosters, working smarter, not harder to move the markers. On his way to conquer, trading and investing, drinking the coffee while reflecting on the blessing. The markets are not crashing, the prices might be slashing, just to pretend they're in fashion. Hit the like button, comments, and smash it. Boom, boom, Jordan in the room, grab the bull by the horns, up to the moon. Flow from the plateau, make the play. Boom, boom, it's a taco day.
That's the best. That's the best. You guys are all the best. Have a beautiful day, everyone. And I'll talk to you tomorrow. Graham, am I worried about BlockFi? Am I worried about Tether? No, not at all. I have a significant amount of money with BlockFi. I'm still keeping it there. I'm not worried. Is there a risk anytime that you use a third party exchange? 100%. Not your keys, not your coins. Always understand your risks and diversify. Spread yourself around, have multiple strategies, deploy multiple strategies. But I mean, BlockFi's last valuation was $350 billion. As said from the beginning, it's a VC play focused on growth. Whether or not their growth is continuing right now is one, but they're building, and they're going to be building throughout the bear market. It's not their first bear market, by the way. When a company is able to go ahead and withstand a 53% market correction that unfolds relatively quickly, right? We just remember what happened over here. We had this like massive downfall over here, 53%, and they're all in check. They managing their risk very well. That's very important for me. When the markets came off, 20%, whatever, the Fed had to inject $4.1 trillion. No one was there to bail out BlockFi, but they're collateralizing their loans. If you're taking out a loan, then what you're doing is you're putting up your Bitcoin as collateral. And if that goes against you, they're able to call in that collateral. It's a lot safer than the fractional reserve system, I feel, but that's not a guarantee. It's the markets, and anything could happen. And, if BlockFi goes under, who's their third party risk? Who is their counterparty risk, I should have said. Is it the same counterparty risk that Gemini holds? I think so. If BlockFi goes down, does Gemini go down? I think so. Are the Winklevoss brothers going to let BlockFi go down? I don't think so, but I don't know. It's just a risk assessment that I have done that I continue to do. I'm not an oracle. I don't have a crystal ball, but we'll find out, Everyone, have a beautiful day. I'll talk to you tomorrow.